Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Thursday, March 9th, and we are one day away from the unemployment report, employment report. Well, we're going to get the employment report and unemployment numbers is the easiest way to say it tomorrow morning, which will be relatively impactful. We have CPI next Tuesday, which will probably be more of an important number. But since unemployment and inflation more or less go hand in hand, if we get a bad print, meaning employment numbers come in higher than expected, then I would expect the market to react negatively because it supports a Fed tightening narrative. And if employment numbers come in below expected, I think that would be good for the market. It potentially would give it a breath of fresh air, potentially help support, a positive CPI narrative and dampen a little bit of the fears in relation to Fed tightening. So very much something to consider tomorrow. I think today's price action is going to be a little lame. We do have, several factors kind of standing over us in terms of large market sells. You've got Mt. Gox coming. I think, the U.S. government's liquidating some Bitcoin. So there is some general overhang. Silvergate also went under yesterday, but I would estimate that a lot of their assets, were liquidated throughout February and beginning of March, just knowing where their woes are. They certainly could have more things to sell. Also, Voyager, was approved by Binance, was approved to sell to Binance US by the US judge. So I believe their foundation has also been selling some assets to create, capital for debtors and those going through bankruptcy. So definitely some negative market factors contributing to sell pressure. And obviously it's, weakening the desire for buy pressure to come into the market. So that is also something to consider. But, we are getting near these monthly lows that we discussed yesterday. And of course, with unemployment tomorrow and CPI on Tuesday, we might be able to see some sort of light at the end of the tunnel, at least for this 4 or 5 weeks of bearishness that we've been facing, at least, mainly in crypto. So looking at the dollar, we when we spoke yesterday, we were just bouncing off of the top of the demand zone. We did end up going back into the demand zone, which is quite interesting. We did talk about the idea of it deviating back down in here, which I did not entirely expect so quickly, but it could certainly just be continuation of market structure, and basic market structure. You've got your lower low, then you've got your higher low, then you've got your higher low, then you've got your higher high, and now we have another higher high. So obviously that's positive for market structure in relation to DXY. So if it closes below 104.2, that market structure will be broken. If it can stay above 104.2, the market structure will likely survive. So that is very much something to consider if you are bullish or bearish on DXY. As it stands now, the market structure is intact for bullishness. But if this slide ends up bringing us below the recent low, that'll then be a lower low within the market structure. It could potentially be a larger, higher high, but you're starting to break down in the larger market structure. So, very much something to consider there and something to keep an eye out for. I think this 105 number is going to be very important. We're obviously kind of dripping down towards it as we speak today. So this will be very important as I'm considering this kind of the lower end of the demand zone, considering we had some wicks here. We quickly deviated above it, and we had some flat openings right here. So this is a really good area. And if we drop below 105, that could definitely, if we're talking about going into tomorrow, that could certainly coincide with a negative or a positive jobs report, for at least positive in terms of market bullishness. So, and then of course, it could bounce at 105, into the evening overnight and then move higher if the jobs report is negative in terms of market outlook. So, there's two scenarios there, but, critical numbers are obviously where we have the trends laid out. We'll break below 104.2, bullish luster is beginning to get lost. Above 105, you're still pretty strong in terms of bullishness if you can bounce and come right back out of the demand zone. And then if you accept below 105, then it definitely gets a little precarious. But if we started seeping back down towards 104.2, I would guess that risk definitely has a little bit of a breather, and that could coincide with, CPI and some data points next week that could be positive for the market. So looking at equities, we did see a bit of a boost yesterday that we mentioned. Equities dropped, pretty hardcore while we were speaking, and then quickly recovered right around that 2 p.m. Eastern open, and then chopped around before rising into today's session. So, and of course, weekly VWAP tagged again, always an important, tool to use. We're on the 4-hour now, so there's still, I believe, an hour and 20 minutes left in. Actually, I think there's 2 hours and 20 minutes left in this candle. So still quite a ways to go, but you potentially have these double tweezer tops sitting on just under the VWAP, which we typically recognize as not a positive candle pattern. So very much something to consider there. When you see these tweezer tops and these full bodies downwards, it's certainly not the best indication. So where we want to survive currently for equities is this 39.92 level, which is basically coincides with these flat opens of these candles that I'm hovering over right now. So we want to survive that, which is, so consider that the high end of the previous range, and now we're in the high end of the previous range. This is the low end of the previous range, or I guess the current range, if you really want to call it. But you could call these two separate ranges, or you could call these, one large range with a high end and a low end. So this is, you've seen me draw a million of these. So you've got your high end, you've got your center range, you've got your low end of the range. So where equities are currently trading at is, high end of the range is 40.10, which we've lined out as being quite important many times. Low end of the range is obviously, we could probably move it towards the lows, but I like the flat open just because I consider this wick down here deviation. And so you're basically ping pong. You're on the low end of the range. Now you're on the high end of the range, and you want to survive the high end of the range and get back up to the top end of the range so that you can try and break above. So, basic market structure, bang, hit the lows, hit the top, which is, more or less the mid range at this point, make the new lows, tag the new lows, and then move higher to the top end of the range. So, I mean, that's a very classic range style pattern. And so since we're on the top half of the range, it's certainly positive, but there is nothing here that really makes me super excited. So what I would like to see is a 4-hour close above 39.93. If that happens, then maybe you can start moving back towards 40.10. If you can break above 40.10, which would be, breaking above that VWAP as well, then you probably, come back down, tag it, and then you can possibly move higher to 40.50. If you close below 39.93, you're probably just going to seep back into this lower end of the range for either a range bound play, or we would start to drip lower towards the recent lows, that 39.20, possibly 39.50 level, if the 39.70 level is broken. So very important to consider that as well. I don't think today is probably the best day to enter trades, considering we do have the employment numbers tomorrow. So whatever you're betting this morning, you're going to be betting, you're going to be, whatever you're betting right now is likely going to be hinged on employment numbers tomorrow. I'm not saying it's going to move the market, wildly, but you will see some volatility, and depending on the strength or the weakness of the number, you could certainly see a momentum shift as we look to CPI on Tuesday. So I do consider this a bit of larger of an unemployment print than we've had before, just considering the grander context. Jerome Powell is talking about tightening. Unemployment is really strong. It's at max unemployment. Inflation didn't come down, at all last month. But we've got the Cleveland Fed predicting a potential 1% drop in CPI. So the Fed is still saying that they're data dependent. So that's the one thing. I don't want to fight the Fed at all, but I do recognize that if they are data dependent and we get two decent data points on Friday and Tuesday, which are pretty short time in the market, then, then the narrative or the tide, or at least the short-term momentum could shift in the bulls' favor. So, I do think it's intelligent to start thinking contrarian thoughts. Expect the best, prepare for the worst. Expect good, unemployment numbers, expect good CPI, prepare for the bad numbers for both of those. I think that's probably the better outlook for this time. I think, if you're just continually shorting for 4, 5, 6 weeks in a row, at some point you're probably going to get caught with your pants down. So, actually, let's move back to Bitcoin because I think we're actually breaking, or let's move over to Bitcoin because we are nearing that February low. So let me go ahead and zoom out here, get a better view. So where we were yesterday, and I did talk about, we were hanging out right up here near this VWAP. So I think we were on 22.1 is where we were when we spoke yesterday. I mentioned, decent spot RR for longs. We definitely saw a lot come into play, but that rejection off the VWAP, was certainly, it was the nail in the coffin. I closed my longs on this rejection, more or less closer to lunchtime. And then we pretty much right after that 4-hour close, we pretty much dropped. So I did mention, if you weren't longing, then a decent short would be to 21.3. But I think once we tag 21.3, because if we look at it from a monthly perspective, and I don't know why this candle is super wonky. Actually, what I can do is remove drawings. So if we look at the monthly, and I'll zoom in super duper. So if we're looking at the monthly, this is February where I'm hovering over now, and this is March. So typically you would expect at least the February low to get tagged, which is 21.3, which I had drawn. And so, if you're, a savvy trader, typically you'll look for a long in that area. And it's just, it's basically, it's playing liquidity. And we've called out 21.3 as a very important level pretty much every single day, just talking about potential downside because momentum has been gross. Now starting to get a little contrarian that we're at these support levels, but the narrative, or the story for this technical analysis is that you've got your highs, from this range back in mid-January, and then it also coincides with your February low. So it doesn't coincide with your exact January high, but it coincides with a relatively important range in January where we traded for about a week, and then obviously lifted us higher, and we've held above that since January 20th. So nearly a month and a half, we've been above the 21.3 level. And so it's definitely a critical juncture in Bitcoin's, a short-term lifespan, at least. So if we do not see a bounce at 21.3, and I guarantee you will definitely see some long step in around this level, maybe all the way down to 21.2, 21.1. But you'll definitely see some long step in this level, at least attacking, I would say, at minimum 22, maybe as high as, somewhere around 23, maybe 22.8. Which is a pretty decent resistance level based on the last dump as well. So if we do bounce here, I would say 22 to 22.8 would be pretty decent targets. But again, going back to the sell pressure that we're experiencing, I do believe that being contrarian soon, or thinking contrarian thoughts now is the better move, because we could get obviously positive data prints over the next several days. But I will say that this type of slow bleed price action without any swing failure patterns, without any real liquidity grabs, is certainly worrying. We could definitely form, we still have over 3 hours left in this 4 hours, so there's still plenty of time to form potential swing failure pattern. What I'd like to see is that price reattacks, 21.6, 21.7, and closes above that. That would be, 3 beautiful wicks down here. We didn't exactly sweep the lows yet. So, still consider that we could sweep this 21.3 level to a T. But of course, there's still 3 hours left in this 4-hour candle. So what I'd like to see is a nice swing failure pattern with a close above 21.6. In a perfect world, a close above 21.7 would be fantastic and really show some interest in lifting Bitcoin out of this area. So that could certainly be something that we don't see until tomorrow morning as well, meaning that we just, we drop down to sweep the lows, sweep some of this liquidity here. We bounce back above 21.3, and then we try and close above 21.7 heading into tomorrow's session. That's certainly a possibility. And then if we can confirm a break below 21.3, meaning a couple hourlies or a 4-hour break below 21.3, then I think you can start to say, okay, I think 20.5 is going to be in play. And if we really break below 20, then it's going to be, it's going to get pretty hairy pretty quick. So I don't have the best read in the world on this right now, because obviously this is where you would close your shorts if you were short. You could certainly be, targeting much lower on a higher time frame. But, if you've been scalping or intraday trading and you don't have shorts stacked all the way since, mid-February, this is typically where you would start closing and thinking about mean reversion. And Bitcoin has certainly had its times where it will certainly drop like a rock, but I think, there's no immediate negative catalyst. If Silvergate was super bearish, we probably would have seen more candles like this. And the TWAP selling from Voyager, from Mt. Gox, from the US government has obviously been going on. So will they take a pause? Will their financial analysts say, maybe we want to sell at higher prices? I don't know that, but all I know is that 21.3 is an extremely important pivot point. And I do know, this is typically where you would long this type of formation. And you would probably, set your stop, if you were on a low leverage, I would say around 21K, because we could certainly fill some liquidity all the way down to 21 flat. So, maybe you set your stop a little bit tighter, but I wouldn't be shocked if we swept liquidity down to 21.2, at least, considering the February low, I think, is 21,350. So maybe 21.3, maybe 21.2 as a liquidity sweep, and then we move higher. Or if we close, underneath 21.3, then we know that it's likely that 20.5 is coming into play in a future near you. So looking at ETH, much simpler to read. Fortunately has been yesterday, or since, or I should say since last week. The number in the sand is still that 1540 number. We're obviously below it now. If we zoom in, it almost looks like we did kind of break below it, retest it, and now we are getting rejected off of it. So, got that Darth Maul right here, could not close above it. So, and then we had a wick up, immediately rejected down. So ETH to 1500 certainly looks likely if we close below 1525. So something to consider there. And then in the same style of analysis as Bitcoin, although we don't have a high end that it was trading, I think this was coinciding with that range in the 20.5 area for Bitcoin. But the February low for ETH is 1480. I guess actually, the February low is 1465, I should say. But I have the trend line drawn at 1480. So if 1465 fails for Ethereum, then I would say this is pretty much your next stop. You may have some trading around this area and maybe around this area, but once you get below that February low, things get very hairy on a higher time frame perspective. So I would not be shocked if we're at 1500 by the end of today or tomorrow. And that is of course hinged on if 1525 fails. But very similar to Bitcoin, if 21.3 holds, I would more or less expect 1465 to hold for Ethereum. And if Bitcoin sweeps its lows, I would expect Ethereum to likely sweep this level as well before coming out of it. So unfortunately, I don't have anything super clear or concise in terms of a trade idea today. This is, like I said, this is typically where you would long, but it's certainly risky, and I don't see any signal that's making me want to put any trades on the board. Just as a catch up, I closed my short yesterday at break even. I said I had my stops set at entry, and obviously that was a no win for me, but I'm not placing any longs currently. I'm going to wait for the unemployment numbers tomorrow. I think it's best to just watch and wait and see how this ugliness continues without any real data. or Jerome Powell or anything to really muck it up. So we cross our fingers. We hope that the February lows hold. We hope that equities don't nuke. And we prepare ourselves if that does happen. So tomorrow morning, I think we'll have some really good trades. The unemployment data is going to be very obvious in terms of whether it's good or bad. Just to give you a quick primer, the employment report. So the expectation is 225,000. If it is above 225,000, prices should head lower. If the number is below 225,000, prices should head higher. The last print was 517K. That was more than double what was expected. And that was a big drop off in the market that day. So be prepared for this number. If it's anything close to this, we're going to see a major nuke. That I can pretty much guarantee. If it's 225 or less, we probably see some sort of mean reversion or recovery. If it is, 250K, then I would probably say we sweep the lows if we haven't swept them already. What happens after that, I do not know. And if it's above 250K, I'd say, lows are probably going to get more than swept. And then, of course, like I said, 225 or below, I think you'll probably see some mean reversion. The market does not want this number coming in hot, but I think it will tolerate it coming in relatively even. So then, of course, I would expect the unemployment rate to stay around 3.4% unless this number comes in as high as the previous numbers. So something to consider there. So tomorrow morning, big print, I think, large, more important than it usually is, just given it's the first data prints that the Fed is dependent on while we're seeing all of this bearishness. But I will also say that Bitcoin does seem to be fighting the good fight around 21.3. Let's zoom in on the 1 hour just to get a complete closeout. Nothing too crazy, but there is definitely buying interest at 21.3. We're seeing some sell volume start to rise. Typically, when you see a big rise in sell volume, it'll typically be some sort of at least local bottom signal. And of course, that that local bottom was, I think, like 5 days. So something to consider there. Alrighty, good luck. Happy trading. See everybody tomorrow. We'll obviously speak after the unemployment report. We'll update the Trade the Chain community with what happens, but you guys all know the outlook. We're sitting at a key pivot point for both Ethereum, equities, and Bitcoin. I would say more important for Bitcoin and equities on a higher time frame scale more important for Bitcoin and Ethereum compared to equities on a higher time frame scale. Ethereum and Bitcoin are much more in a precarious spot, but equities certainly can help push the market in whatever direction they want, considering the general correlation. So we're at a big pivot point. We have a big data point tomorrow. We have a big data point Tuesday. So I think it's best to remain patient and play off of the data, as that is basically what the Fed has told us they will be doing. And I think you can present some good trades based off of what that number comes in, whether it's higher or lower than expected tomorrow. So good luck tomorrow. Talk to everybody soon.